We are getting ready for a super interesting panel. The startup stock exchanges or startup private markets. In the old days, to have a listing, an IPO, you had to be a monster company to be able to arrive at the level. And startups could maybe when they got to a certain level, they could kind of sneak their way into a small stock exchange to a backdoor listing, a reverse listing. But things are starting to change. There's pressure on the exchanges, and they are responding by finding new ways to allow smaller companies to come and list. I've got a list here: the elite program of the London Stock Exchange, the private market of the Istanbul Stock Exchange, Funda Beam, Thailand's experimenting with this. So there are other options coming online, and we've got some panelists who are going to come and talk about that now. We'd like to welcome the moderator for the panel to start off, Zsolt Katona, the former CEO of the Budapest Stock Exchange in Hungary. Zsolt Katona, if you could please come and join us. We're going to get, there he is, he's sneaking up from behind. I thought you were all on the other side. Thank you. He's got a couple of slides, but we'd like to invite him to come up on stage. You know, one of the global heavyweights. Karsten Boring is the Associate Vice President of Listings, EMEA, for NASDAQ, the world's biggest technology listing, the board that everybody wants to list on. So thank you very much for joining us, Karsten. Also, Paula Fischerova, the Project Manager of the Start Market on the Prague Stock Exchange. Where's Paula coming up from the right-hand side? Thank you very much for joining us today. There we go. Thank you. And we'd also like to welcome Dr. Yilmaz Argudin, the chairman of the board for the Rothschild Investment Bank here in Turkey, who's going to have a little bit of a different perspective than the exchanges. So Dr. Argudin, thank you very much for joining us. And I am going to turn over command of the stage to our moderator, Zsolt Katona. Zsolt, the floor is yours. Big round of applause for our panel, people. Let's keep them going to the end of the day. All right.
Thank you very much for the warm introduction. Ladies and gentlemen, we really appreciate that you stayed at the end of the day. It's always difficult to stay at 4 o'clock, 5 o'clock to watch a panel, but we really appreciate, and we guarantee that you will hear interesting topics. Obviously, our topic, as you can see from the title, is the startup stock exchanges or startup private markets. So we are trying to experience or discuss the regulated and non-regulated markets connection to startup financing. Actually, we put up a couple of slides, so maybe we can. It's just for illustrative purposes, so we will have a hopefully intense discussion with the panel participants, which I would like to introduce quickly. Dr. Yilmaz Argudin is a leading strategist, advisor, board member of major public and private institutions and NGOs. He is the founder and chairman of Arge Consulting, which is a leading management consulting firm based in Istanbul. And he is also the chairman of the board of Rothschild Investment Bank in Turkey. Mr. Karsten Boring is Associate Vice President Listings EMEA and Head of Listings Capital Markets at NASDAQ Copenhagen. Karsten is responsible for all listed companies in Denmark and has more than 20 years of experience with listing companies and has in-depth knowledge of the capital markets. Maybe I should have started with Pavla. Sorry for mentioning you last, but we are in alphabetical order. Ms. Pavla Fischerova is the project manager of the Start Market at the Prague Stock Exchange since 2018. In the UK, she worked in the financial services and wealth management industry for 12 years, and she holds a chartered financial planner certificate. My name is Zsolt Katona. I have a corporate investment banking background, but more importantly, I've been the CEO of the Budapest Stock Exchange for 4 years. That was probably the best part of my career, which I really enjoyed. Currently, I'm more in the VC and private equity space. So that's basically just for the introduction. So let's concentrate on the main topic. What are the, as you can see on the first slide, what are the main advantages of being listed? It's quite obvious. You can get funding, but you can get funding from other sources as well. I think what is very important is the confidence you can gain through stock exchange listing. You can gain confidence from banks and other lenders, so you can get better rates because of your transparency. You can be more efficient because of the pressure by the shareholders, because they are expecting you to deliver dividends, performance, and so on. You can have better confidence from clients, because again, the transparency gives them better confidence. And you can get better confidence from the public in general because of your brand recognition. Now comes the question, if all these advantages exist, why stock exchanges so far failed or were struggling to provide funding for startups? Why they can serve only established companies, and why is there a fundamental mismatch between the two entities? I don't know what's your view on that, so maybe we can start with Yilmaz.
Okay. Being the only Turkish on the panel, first I would like to welcome you all to Istanbul. What Napoleon said, as had the world been a single country, Istanbul should have been its capital. So it's a nice place to be. Welcome. Frankly, the Ottoman Empire had an impact on the first public company as well. Did you know that? Because when the Ottoman Empire controlled the Mediterranean, then the Europeans had to find other ways to reach the richness of Asia, basically India and so forth. And the technical know-how came from the Portuguese with the new vessels and so forth. But the institutional innovation came from the Netherlands. So Amsterdam became very rich because of the first public company, which was Dutch East India Company. And basically, there are two reasons why people form companies or public companies. One of them is to manage risks. The other one is to get to scale fast to make sure that capital is employed more efficiently. So it's very simple. Okay. However, even the Dutch East India Company failed after about 1,800 trips, which brought a lot of richness. And the reasoning for that was failure of corporate governance. So clearly, stock exchanges are extremely focused on good governance and so forth. And currently, we are conducting a research, which I would like to share some preliminary research results of. One of the key risk areas is the sustainability area. And while lots of people are starting to pay a lot of attention, we just wanted to look at some of the top companies, 150, 200 companies, who are very good. They are in the sustainable indices and so forth. Let me ask a question. Which proportion of those publish board skill matrix? About 20. Which proportion of lists sustainability as a skill? Less than 10%, even the top of them. So we definitely need to, but there are very good examples who are doing it much better and so forth among those 10%. So we have to speed up learning there. Coming back to the startups, why do we have difficulty with the stock exchanges and startups? Because startups need three things: know-how, know-who, and money. And the stock exchanges generally do not provide the first two, but only the latter one. And particularly at the startup level, the first two, which is know-how and know-who, is more important than the money itself. That's why probably angel investors are getting into that than stock exchange. But whenever we put a problem, we have to come up with some solutions as well. Let me throw an idea. Rather than opening startups in the stock exchanges, perhaps we should consider opening up angel investors in stock exchanges, because it would provide a portfolio and also the know-how and know-who associated with the portfolio. Thank you.
Yes, let's talk about it maybe a little bit later. I think maybe we will have some good examples for that from Pavla as well. Let's go a little bit to the US market. Some of the good things can come from the US, definitely, especially in the capital markets field. The US Jobs Act, which was created or implemented in 2016, had one major aim. The aim was to link the masses, so the private individuals, to the companies, with the companies. The aim was to break the cycle of traditional IPOs, big IPOs, because the big IPOs were only profitable for the founders, the VC private equity investors, and for the big institutional clients who bought the shares. So that was the aim of the Jobs Act. The Reg A offerings, which was created, they allowed investors or companies to attract investors through direct advertising. It caused problems because many companies tried very heavy advertising campaigns, but they were short on fundamentals. And not too many companies were listed on NASDAQ or the NYSE. And even those who were listed, the share price were massively underperforming the market. What can be the problem there? Maybe, I don't know, Karsten, whether your colleagues from NASDAQ in the US may have had some insights on this topic.
Yeah, I'm Karsten, and thank you for hosting us so fine here in Istanbul. We're really happy to be here. And just to put a few words on NASDAQ, because it could be a hidden secret for many that, in fact, we are running 8 exchanges around the world, and we are the only true globally exchange company in the world. And you can probably hear it from me. I'm a Dane working out of NASDAQ Copenhagen, and we run the exchanges in Denmark, Sweden, Finland, Iceland, and the Baltic countries, and of course our flagship exchange in the US. The Job Act was very important for us because, and it's really a good example of how exchanges are working together with the political side. Because in the US, you're really used to have funding through a stock exchange, and in fact that 2/3 of all investments in companies in the US are coming from a stock exchange or the public market in some way. And in Europe, it's only 1/3, and that's part of our problem here in Europe. But when the big crisis came in 2008, suddenly there were no IPOs in the US. Nobody dared to go public, because when you go public before the Job Act was set in order in 2008 or in 2009, you needed to fail public. When you filed for your IPO, you did it public. So everybody could see that you were trying to get to the stock exchange. In Europe, we always did it secretly. So you can work with the authorities about the prospectus and everything, and then if you are ready and you could see that there was an opportunity to go to the market, you would publish and go and do some advertising about, I'm going public, buy some shares in me. So that was one of the good things about the Job Act. The Job Act has, in fact, meant a lot of companies coming to the market. Some of them have had some difficulties in the startup, but it meant that companies suddenly could come to the US or be listed in the US. And it was also very important for European companies to be a part of the US ecosystem, because suddenly we could list European and Asian companies on the US platform without applying to all the regulators' demands that they used to have in the old days. So in fact, we try to disrupt the market, so to speak, with lighter informations from the company to get listed. And that loosened up a lot, because after 2009, there were absolutely no IPOs in the US, just as there wasn't here in the European space. US have moved on with the Job Act, so there are IPOs, a lot of IPOs. Europe is still struggling because we are still putting too many regulation on our companies that want to go public. Back to your first question, why it's not suitable for startups to be listed, because there is a huge demand on the regulatory demand for these companies.
Yeah, fully agree. Thank you. If we are talking about this subject, we should mention definitely crowdfunding as well as a source. Some people say that crowdfunding is the last resort for startups. They try first different segments, and then if nothing else comes to the picture, then crowdfunding. I don't agree with that. But definitely, if we are talking about stock exchanges and crowdfunding, we can see in the world some examples. Many exchanges, like the Startup Stock Exchange, which was Curaçao-based, or the Live Market in Thailand, they are basically operating as a crowdfunding platform. Also, the existing stock exchanges tend to team up with crowdfunded platforms. In my closer region, Central Eastern Europe, if you can see the Polish Stock Exchange in Warsaw teamed up with Bees Fund, or the Zagreb Stock Exchange in Croatia teamed up with Funderbeam to provide acceleration, to provide early grooming for Southeast European companies. What do you think? Can it be a good way for stock exchanges to create these type of alliances with crowdfunding platforms in order to groom companies, in order to educate them, and to prepare them for later stage listing on the main market? Maybe Pavla can say a word about it.
I would like to say hello to everyone as well, and thank you for a nice welcome to Turkey and Istanbul. It's a beautiful city, so I'm very happy to be here. We launched the Start Market at Prague Stock Exchange last year, and I would say it's more suitable for scale-up business than the startup. And I think the reasons were already said. It's just very high failure for startup businesses, and that's the reason why I think they might not belong on stock exchanges. However, with regard to the crowdfunding, it could be a good exit strategy for these businesses to go to an IPO. So this is where we positioned Start Market as well. So we can offer an exit strategy for businesses who just wants to go to the next level of funding. That could be the same reason for business angels. So I think I agree what was said at the beginning, that the startups are not ready for IPOs. They should look for different styles of funding, and maybe when the business angel wants to exit or they want to grow and scale up, then they should look for junior markets like at Nasdaq, maybe at Prague as well. I know there is a junior market in Poland as well. And I think the great example is probably the AIM market in the UK, which is the biggest junior market in Europe. So that should be a big example for all of us.
But your market, the Start Market, Pavla, is it for private companies?
No. It's for public companies.
It's for public.
So it's basically because it's very difficult to find large corporates in the Czech Republic because we are a small economy. So obviously 99% of our companies are small and medium businesses. So we are trying to offer them a choice to raise money publicly as well. So that was the reason why the start market was launched. It wasn't an easy route because, yeah, the regulation is killing us, I would like to say. It's not easy, but at the end of 2018, we were quite proud to say that we could admit 5 companies to the market, and we are very happy that they could join us, and we are hoping that some other companies will join us this year.
Okay, thank you.
Okay?
Karsten would like to add something to that.
That's just a little add-on to that, because I totally agree, and that's also why these old stock exchanges need to look inside ourselves and see, well, how are we going to move forward. Copenhagen Stock Exchange is the oldest exchange in the world, 1808. We've been working since, so it's a long time. And in fact, we launched a junior market in 2005. And it was a big thing for us because, as we heard in the introduction, there's lower liquidity, the bankruptcy maybe be higher, the whole transparency of the company is smaller than a big company with a lot of people working in it. But we need to educate our investors and all our stakeholders that will be a part of the stock exchanges in the future. And since the 2005, we in fact have had more than 500 companies going through our First North system. And it's only operating in 3 countries, Denmark, Sweden, and Finland. So even though that we are fairly small companies, we've been beating exchanges like AIM in number of companies for a couple of years. And I think over the last couple of years, we have listed more than 200 companies. And that is very important for us to connect to this infrastructure of startup, business angels, VCs, because it's not all about, when we are talking with companies that should join our junior market, it's not an exit, it's an add-on. So if you are looking for exit routes, if you're a VC, for instance, you need to find these investors yourself and do a block trade or something to carry it on in some new investor environment. But you can go to the public and the retail investors and say, hey, will you be a part of this journey with this smart VCs, business angels that you probably know from the media and everything else? Join forces, and we can see that. So we have helped many companies to raise a lot of companies. We also help a lot of business angels to take their companies a little bit further than they could. Because if you need a certain size, like reach a certain size of your company, and you maybe need 10 million euros or something to the next level of your company, you can't do that alone. In the old days, you would sell it to some other VCs, private equities, or somebody else. Now you can co-fund your company on the public market and also get all the benefits of being a well-known company. We have made some investigation or analysis of some of our companies going public, and if you look into to the media value of going public, it's 5 to 7 times the cost of going public. So the cost of capital is suddenly a new word that guys like me in business suit need to add on. It's not only how big is the spread, how in the internal rate of return, but it's also all the add-ons. How much would it have cost you in media coverage if you are supposed to get this same attraction as you do as a listed company?
Thank you very much. Yilmaz, do you know what is the situation on Istanbul Stock Exchange with other special segments? I heard that there is a pre-market trading platform and also for qualified investors, a special segment.
Yes.
How does it go?
Well, they are relatively new and the number of transactions is limited, but the regulation is there. However, as I said, particularly with startups, it's not necessarily the best fit because you need people who are hand-holding and so forth at the startup level. Maybe a level just behind, after startup, it might get better. The infrastructure is good, but the number of transactions is still quite limited. One other thing that I would like to add is that, particularly with regards to angel investors, because we are at the Angel Investors Forum, and we are saying that we are empowering the development of the world. Should we apply all of this angel investor know-how only to the startups that are independent? Or how about corporations who need a lot of startups within the corporation? Maybe we should consider having more angel investors on the boards of bigger companies to entice them to become more innovative as well.
Entrepreneur-minded, yes.
Exactly.
That's a good proposal. Coming back to my home country and about the special market segments, I can also share with you how the Budapest Stock Exchange is handling these type of investments. We created a special segment called Extend. The idea was first brought to the scene at the time when I was the CEO, but it was implemented only in 2018. It is an MTF, especially dedicated for early stage companies, not too early, so not angel or seed, but basically those who are in the growth phase, and they have already visible results, but they are having difficulties with funding. And this market has lower fees and lower reporting requirements. Plus, what is, I think, quite unique is that the Hungarian government has a special fund. It is called the National Stock Exchange Fund, which is basically underwriting a certain percentage of the offering. So they can take a share at the mini IPO of these companies. I think it's a good example. Currently, we have only 2 companies, but hopefully the number will grow. Okay, my next topic, which I would like to ask, is from Karsten, basically about the Nasdaq experience as well, the First North model, and also the private market. How do they work, and are there any deal statistics?
First North market I've been talking a little bit about, and I think they are very similar to other junior markets here in Europe, and it's also an MTF market platform as all the other ones, and with a twist. But it is a good journey, and we have seen many good companies going this way. And in fact, we have had over the last couple of years, over the last 10 years, we have 60 companies moving from First North to our main market. So they have taken the journey that we thought they would take. And the reason why we were so eager to do this, and it's also, I guess, the reason why the government are so eager to support your system as well, is of course we want to have our small and mid-sized companies to stay a little bit longer in our countries. Because all these very smart companies can easily be sold to somebody else, and we want to have them home and try to make them get some roots in the earth of our community, so they can be the next big blue chip companies. So that's also the reason why we're doing this and why there's a big fuss about this. But it is a fact that many of you also know here that private companies stay longer private. It's in fact that we've heard it a few times here today that private equity, VCs, business angels, there are so much money out there, so they can fund the company forever and put it into a next fund and the next fund, and without going public in any way. So we need to create and look for new opportunities as an exchange. And in fact, where we come from, we normally say that exchanges invented crowdfunding. That was before the political side tried to interfere with us, so it's so difficult to list a company today. And then now that we're going back to crowdfunding and starting all over again. But in the US, we have started a Nasdaq private market where we take bigger companies. It's typically Serial C round, more than 500 million US dollars in capital need. We take them and they can use our trading platform for private deals. So they invite institutional investors to come in and do the due diligence, look at the company, and then they have an auction in this closed private market. And we have done about 230 deals on this market already. We have been running it for 5 years. It is difficult to run it. There's a lot of regulation. Every time we do something from an exchange point of view, there's a tons of regulation, and mostly the only people we are hiring right now is compliance people. So it is difficult. So we need to think different. And this Nasdaq private market is a US model, but it's mostly for bigger US-centric companies, as it is right now. If we go 10 years back, there were 7 unicorns privately held in the US. Today, there's more than 150 unicorns in the US privately held by VCs and private equities. So that's why we go into this exercise as well, and hopefully we can bring it down to smaller companies, but it is difficult because suddenly there's only 2 and 3 investors going into this market, and then you don't need a big trading machine to do it. But some of these companies has evolved from maybe 50 employees to 1,000 employees, all with company shares that are non-traded. So it's also a good opportunity for bringing in some liquidities in the employees' shares, so they can have some of the same benefits like a listed company has.
Mm-hmm.
So
Okay.
we are really looking forward to this journey.
Understood. Okay, so it's not relevant for our topic of angel investment. I thought it's also for smaller companies, but it's not. Yes. At the time when at the Budapest Stock Exchange we were thinking about creating this new market segment, we actually thought that it could be used also for small private deals. So angel investors, VC companies can basically invite a couple of maybe 100, 150. I think 150 is the limit now in Europe. Qualified investors, so they can join the same offering, and the shares can be traded on the exchange. We talked with many angel investors and VCs, and we felt there was a reluctance to involve private individuals or private persons, qualified investors in these deals. Probably it's too difficult to adjust the term sheet and other administrative reasons, so we dropped this idea. But basically, the stock market is acting a little bit like that, no?
Well, I would say, I don't want to say that, but we are still a little bit behind, of course, of US and probably Nasdaq as well. So we still have it kind of in nappies. So I don't think in Central Europe it's probably the time to go on the market private, because there is still not sufficient information about private companies. So that's the reason why in Prague we still stayed with public companies, because what we want to do, we want to show that Czech companies can be more transparent, so they can go through stock market and offer their shares to investors in the Czech Republic. I think it's the same as in North. We want to keep companies at home. We don't want to sell them globally. We've got lots of clever people who have lots of successful companies, so we want to keep them in the Czech Republic, so they can break through, they can grow faster, and they can dream bigger, basically. So that was the reason of the start market. We also feel that it should be the first level of institutional funding, because start market is MTF, so we can have pension funds who can come and help as investors. Again, we have similar issues. I think it's everywhere the same with liquidity. Our liquidity is just once a month, so obviously that's an obstacle. But we are trying to speak to them, and we say we have to start somewhere. As already someone said today, I think it was Mr. Cowley, they started 20 years ago, we are starting now, so we need a little bit of faith of our state and our pension funds as well.
Thank you very much, Pavla. Maybe if we have just 2 minutes, just look at the audience whether they have any questions to the panelists. Yes.
Hello, this is an absolutely lovely panel. Thank you so much. I've learned so much. I would just have 2 or 3 questions, actually. One, for the First North, is it possible for companies from other countries to come and be presented on the First North?
Yes, it is an international platform, even though it's a little bit more difficult to trade all the shares. But for instance, with UK, and we have connectivity to brokers in there and can link between. It's a little bit complicated, but I would love to speak to you about it. But it works. So now we have to have the back end, our what's called. Our quest, and where you the clearing and settlement of all the shares is a little bit tricky for these small shares, but we have an agreement with Quest in the UK, so we can do that, and we are also working with Germany and Switzerland and some of the other big countries. But there is, and that's, even though that we can take a smartphone here and do everything, it's an old machine behind all the exchanges. There's borders, there's everything, but there's also being a competition between all the back end of all these transactions. But we have listed a few PLC companies. We are listing some companies from Israel, a lot of them, because we have a lot to do in Israel with the Nasdaq brand as well. And we have seen companies from China, and of course we have seen them from Norway and other countries nearby. But we are trying to get it more international, but it's the same issues when you are business angels or a startup company. It's about trust. So of course, and all the fast movers, you know it, and I don't want to be quoted for this, but the smart people is the fast movers. So that's the first one we talk to, and then we need to do some reality check, and we are quite good at that at Nasdaq, because we have also have our lesson learned in the US with Chinese companies and going to the market. So we are investigating our companies quite good. But
yeah, my second question had to do about the criteria for being accepted to go onto the First North. Yeah, I mean, it's quite frankly, if you were able to internationalize it and to maybe even put it onto another platform, it would be fantastic. Yeah.
Thank you. No, actually there is one more question, yes.
Have you ever thought about, let's say, as the federation, the FESE, the European Stock Exchanges Federation, how to qualify angel investors in order to be able to participate with you in startup company investments? London Stock Exchange, the SEC Security Stock Exchange from the United States, even the Turkish Stock Exchange, have provided a type of qualification to angel investors. Have you thought probably in its over from the Federation of all the European Stock Exchanges to provide type of certification from angel investors?
Yeah, well, at the time when I was the CEO of the stock exchange, we had intense talks with the FESA. We were members of the FESA. We are still, but I'm not. Definitely, there are ongoing talks, and these qualifications. I think they are different country by country. How you can get it. Actually, I was happy to see that WBAF is also on this path. So maybe Carsten can say a word about it from the Nasdaq point of view.
From our side, we are also a part of FESE and working very close with other exchanges, because it's the same topics that we all faces, and it is a global world right now. But as we are doing it right now on our junior market, is to get so much transparency so everybody can join the market. It's very important for us to get a lot of people in, because otherwise you will be stuck with very low liquidity in these transactions. And if you are an exchange, you need to have some liquidity in the shares, because that's also a part of the perception that the companies have that we deliver. But it's on our platform, Quips and all other part of investors are welcome to join and can join on the same way. We are using in the Nordic, when we have these small companies going to the market, and let's say that they are raising 10 million euros. It's not a lot. The market cap is perhaps 30 million euros or something. So it is small companies. They will typically, if they are raising 10 million euros, they will go out and get some anchor investors. And they will go to business angels, VCs, and say, hey, will you like to have a higher share in this transaction? You can have 5%, you can have 10% of the share. You are guaranteed to get that. We will write your name in our prospectus or our information material so other people can see, oh, this is this smart guy from D-Ban or S-Ban or who it is, or this smart local entrepreneur that's always also have put money into this. So it's a really part of us to have these qualified investors. We are just not calling them qualified, but make it transparent so everybody can join our market. And if you want to highlight some names, you can do that if they have set down for maybe 20% of the transaction. And it boosts the IPOs a lot when we have for instance, as the chairman of Danban is called Jesper Jarlbæk as an investor in one of these companies. And we have seen that. Jesper is an investor in one of our smallest and most innovative companies. And it's really boosted the appetite from retail investors.
Thank you very much, Carsten. We are really on a time pressure. So just one sentence from Yilmaz. What's your key takeaway from today's panel session?
Well, first of all, I'm very happy to have the business angels in Istanbul. It's extremely important for our country as well, and globe too. Startups are very important for innovation and future development of the world. But perhaps, especially with regards to their interface with the stock exchanges and so forth, we need to focus as much on the business angels as the startups, because they are the ones who are holding the hands. It's like parenting. When the kid is first born, they need their moms first. Then you go to elementary school and so forth. So we need to support the business angels, perhaps. And also we need to utilize business angels for the startups of the larger companies by bringing them to the boards as well.
Thank you very much. Thank you, Pavla. Thank you, Carsten. Thank you, Yilmaz, for your valuable contribution. And ladies and gentlemen, thank you for your attention.
To our moderator, Zsolt Katona, thank you very much, formerly of the Budapest Stock Exchange. We didn't even get into the threat posed by digital currencies, STOs, ICOs. We can get into that a little bit later. But we are going to get a chance to hear more from Carsten later. Is that right? Perhaps. Perhaps, ladies and gentlemen. Before they go, just in the interest of time, I'm going to let you know you've got about 10 minutes where you can go out, grab something, and come back. We are going to be bringing everybody back into this room at the end of the day for closing remarks, and we believe our friend from NASDAQ is going to be addressing us before some other important business. So he is our closing keynote of the day, so please go grab something, come right back here. We'll hope to have you back and ideally be started by 5:30. Thank you once again to our panel. Thank you.